Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Friends, in this video, I'm going to review the performance of all the products of iThought PMS for the month of June. June was a very rewarding month for all investors. Whatever may be your style, whatever may be your strategy, June seemed to be a very kind month. And for iThought PMS, it has been quite a happy month and the news is good. First, to our flagship product Solitaire. You'll see this small logo at the top saying that we are celebrating 3 years. Actually, come August, we will complete 4 years. And the performance since inception of Solitaire is 22.75% per annum. That's the return that we've made. The 3-year performance is 29.89%. The 2-year performance is 21.30. Our 1-year performance is 31.30. And the 6-month performance is 13.96%. The 3-month performance is 17.15% and the 1-month performance is 5.92. Importantly, across periods 1 month, 3 month, 6 month, 1 year, 2 year, 3 year and since inception, we are showing a significant beat on our benchmark, which is the S&P BSE 500 TRI. And the beat is closer to 400 basis points since inception, but the 1-year beat is significantly higher. It's close to 8%. So, how did this happen? It clearly happened because whenever the investor gave us money, whatever be the level of the benchmark, we have followed a very diligent investment approach in building the portfolio. We have not rushed to invest the money fully as soon as we received it. We have treated the money responsibly and deployed capital on merit. If we like the valuation and we feel there is a justification in buying, only then we have deployed the money in individual stocks. And on a very regular basis, we have reviewed this so that the price changes in individual stocks are factored into individual stock investment decisions in every portfolio. And that is how the outperformance has happened. Another important reason for our outperformance is we follow a private equity kind of investment approach. When we get a new idea, we call in money from the investors. So the investor may have to give anything between 3 and 10% of his corpus. And we invest that money straight into that stock idea which we have just ideated and started. This approach ensures that freshness is infused periodically into the portfolio. We don't sell a stock simply to buy another stock. Our sell decisions are independent of our buy decisions. So, if our research is able to give us good ideas, we need to constantly call money from the clients to buy those new ideas. So, that is something which definitely distinguishes Solitaire from peers. Importantly, this approach of investing is a flexi-cap approach and you can compare Solitaire's performance with any of the flexi-cap portfolios and you will see how the approach has delivered performance over a long period of time. We've already done nearly 46 months and that's long enough for you to make your own judgment. The next product that I'm going to talk about is actually the best performing product in our PMS portfolio. It's VRDDHI PMS. VRDDHI has just completed 2 years and it has had an exceptional run. Since inception, it has given an annualized return of 32.36% against its benchmark BSE 500 TRI, which gave 14.98%. Its 2-year performance is 27.65% against the benchmark performance of 11.72. Its 1 year performance is 53.61% against 23.98% of the benchmark. The 6-month performance is 38.82 against the benchmark performance of 6.78%. The 3-month performance is 32.37% against the benchmark of 13.18%. And the 1-month performance is 8.82% versus 4.28% done by the S&P BSE 500 TRI. So it's been again a secular beat across time frames: 1 month, 3 months, 6 months, 1 year, 2 years, and since inception. Small cap and micro cap is a very difficult category to invest. It's a category where you have to be very diligent, and here again we have followed a research style which is like how the private equity players do. So we are going deeper into businesses, understanding them better, and then buying them, because smaller businesses must be understood thoroughly before we invest. Importantly, our investing is away from the benchmark, and we still beat the benchmark by this wide gap. It's a long journey. We recognize that we have a long way to go to build on the good start that we have, but we are committed to treat that money which the investor brings in now even more responsibly. We will not deploy the money in one go. We will deploy the money on merit of each investment idea and the valuation, and build the portfolio gradually over time. So that is something that you must know about VRDDI, so that the macro judgment of the market or the index or the small cap index should not affect your decision making to join this, because here we are exercising the discretion in how we deploy the money. After you give the money, you can be assured about that. The third product in our portfolio has again completed 2 years. It's TRUBLU. It's a product which invests only inside the Nifty in blue chip stocks. And this portfolio has been built by us with the idea of delivering stable investment performance over very long periods of time. So you will own blue chips, the best of blue chips, which you will not trade. You'll keep the churn very low, and you will achieve sustained compounding over time. Your taxation will be low. The dividends will be again reinvested in blue chips, and you can build a very large corpus which over time will beat the benchmark by a significant margin. This product is still scaling up. Our AUMs are still low, but it has some very, very innovative features. The first one is it offers you the option of a completely variable fee. So the first 6% returns you make will be yours, and you will pay fees only when the returns cross 6%. There's absolutely no fixed fee. So we are taking the responsibility of ensuring that you perform, and you pay only when you perform. We also have the alternative of a fixed fee for this product, but the choice is entirely left to you. The returns in the last month were 3.97% against the Nifty 50 TRI of 3.70. The 3-month return is 11.82% against the Nifty 50 TRI of 11.06%. The 6-month return is 11.56% against the Nifty 50 TRI return of 6.58%. So a lot of good things are happening in the last 6 months in our portfolio. The 1-year return is 25.37% against the benchmark return of 22.91%. And the 2-year returns is 11.92% against the benchmark return of 11.79%. When you compare the since inception return, we are lagging marginally. The return is 11.44% against the benchmark return of 12.31%. So with the exception of the since inception date, we are outperforming the benchmark across 5 periods: 1 month, 3 months, 6 months, 1 year, and 2 years. Now, this is not new to our way of investing. This happened in Solitaire also. But we build the product, and as we build the product, the performance starts showing up. We are fairly confident that we will be able to do very well in this product, and as a reflection of that, I opened my own TRUBLU account recently, and I am planning to scale up my TRUBLU portfolio significantly because I find that it's easier to participate in the product than to invest in individual stocks on my own. So this is something that I've just started, and I believe very much that this product can be a big winner, especially for people who are relying on the pension funds or on some index funds or on large cap, because we believe that this product will give you a better experience than those products simply by the way we choose, the kind of investment universe we function within, and the discipline that we bring to building and holding a portfolio. Importantly, the churn is so low that you will not have much to worry on taxation. So we have brought all this into the product keeping you in mind, and we hope that many of you will bid goodbye to index investing and join TRUBLU and experience how we will work for you to make your performance matter to you. Importantly, we get rewarded only when you do well, and that's the significant hallmark of TRUBLU. So this in short is the review of the pure equity products. We still have another product, which is Sphere, is ithought's multi-asset PMS product. There aren't any comparable products in the entire PMS universe. We have curated a product which is designed to deliver. To whom are we targeting this product? We are targeting this product at people who are about to move money from maybe a PF, or they're getting their gratuity, or they just sold an asset which they had as a surplus and they want to keep that money safely and growing. For families who are moving money from one generation to another, for families who are conserving money and growing it so that their family wealth always remains strong. This product is for all of you, and it's different, it's curated very carefully, and we have brought in dynamics which you cannot have in any mutual fund product. We have brought in dynamics which you normally don't see in a PMS product, which are even scarce in the AF space, and this is a product which I believe will definitely be liked by investors who join. We have quite a few investors who have joined this product. This product has completed over a year and it has settled down very well. Let's look at the performance of Sphere in June. The 1 month performance is 3.94% against the benchmark, which is the NSE multi-asset index, which is 2.27%. The 3 month performance is 10.79% against the benchmark NSE multi-asset index 1 performance of 7.08%. The 6 month performance is 8.85% against the benchmark performance of 4.6%. The 1 year performance is a significant beat, and we have done 31.71% against the benchmark performance of 13.70%. And the since inception performance is 16.49% against the benchmark NSE multi-asset index 1 performance of 6.38%. So the long-term performance is a significant beat. So if you're getting money in a lump sum, which you need to invest very carefully, where you want to beat inflation, you want to beat fixed deposit returns, and you want to beat the Nifty. If you want all three things to happen, here is a product which does it very diligently and by choosing to invest in multi-asset. What is this multi-asset? We invest in equity, we invest in ETFs, we invest in mutual funds, we invest in gold, silver, global funds, we invest in commodity funds, and we will invest in other markets as well. Last but not the least, if equity as a class is very expensive, we will invest in debt also. So the allocation keeps swinging, and here I have shown you the allocation, At the moment, equity is 77%. We have precious metals at 8%. We have global, which is at 5%, and we have cash also, which is significant at 4%. So we are very, very diligent, and we move money across assets, and we believe that even with such a multi-asset approach, you can make decent returns, beat inflation, beat the FD returns, and beat the Nifty. There is another version of Sphere which we have uniquely curated for the non-resident Indian investor. It's called Sphere Neo, and even within this, the investment needs of an NRI in North America is different from the investment needs of an NRI in the Middle East or Singapore. And we have curated this product where we customize according to the geography from which you come in, because you will need to also be compliant to the laws of that country. You're not supposed to invest in some products in India. So, especially for North America, this product is curated in such a way that it is definitely suited for NRIs from different geographies, helps them to manage the wealth they have in India much better than any other alternative, and it's also something where they are treated in a very, very special way, because according to their need, the product is tailored and the product delivers. And here is the performance. The 1 month performance of Sphere Neo is 4.07% against the benchmark NSE Multi-Asset Index 1 performance of 2.27%. The 3 month performance is straight away a significant beat. We have done 10.39% against the benchmark performance of 7.08. The 6 month is also a clear beat. We have done 9.86% against the benchmark returns of 4.60%, and the since inception performance is 14.37% against the benchmark of 7.08. An important thing in Sphere Neo is that this is a classic buy and hold strategy. We try and hold investments for longer durations of time. So if you're in America, then your taxation implications are definitely going to be low if you're participating in Indian equity through Sphere Neo. So I would invite you to know more about this product. We would be happy to give you a webinar or a group presentation or any kind of interaction that will make you understand our product better and participate in it. This is created specially for NRIs, and it's a unique product. There is no other product which is designed purely for the NRIs. Most PMS schemes are made for the domestic investors, and NRIs also participate in them, which doesn't make it tax efficient, which doesn't make it best suited for them. But Sphere Neo has been designed keeping you in mind, and so we want you to make the most out of this product, for which we have worked a lot, hoping you will like it. Thank you for watching this video, and we hope to have you as part of iThought's Sphere Neo family. Thank you.